Well, folks, welcome back to Boss Economics World, where we take the dismal science of economics and turn it into a full-blown circus of absurdity. Today, we're diving headfirst into the economic dumpster fire that is Donald Trump's Liberation Day tariffs, a policy so wild, it makes a roller coaster look like a kiddie ride. Buckle up, because we're about to unpack the economic chaos, the market meltdowns, and the sheer what the heck is going on here energy of it all. And, as always, we'll do it with a wink, a nod, and a healthy dose of satire, because if we don't laugh, we'll cry. Let's go. Picture this, folks, it's April 2025, and Donald Trump, yes, that Donald Trump, decides it's time to unveil his grand economic masterpiece, the so-called Liberation Day tariffs. Import duties as high as 49%. 49%. That's not a tariff, that's a ransom note. And what happens next? Oh, just the biggest two-day stock market sell-off since the pandemic, with investors around the world clutching their pearls and screaming, what fresh hell is this? Billionaire Bill Ackman, yes, the guy who probably owns a yacht named Diversification, takes to X to warn of an economic nuclear winter. Jamie Dimon, the big boss of JP Chase, chimes in, saying, hey, remember inflation? Yeah, it's back, baby, and it might bring its ugly cousin, recession, along for the ride. And Larry Summers, former Treasury Secretary and perpetual voice of doom, predicts job losses in the millions. Millions, folks. That's not an economic policy, that's a Michael Bay movie. Now, here's where it gets juicy. Enter Scott Bessent, Trump's Treasury Secretary and former hedge fund hotshot, who's supposed to be the adult in the room, or, as Wall Street likes to think of him, that a safety catch on Trump's tariff gun. Bessent, who spent 40 years rubbing elbows with investing legends like George Soros and Stanley Druckenmiller, told his clients just months earlier, oh, don't worry, the tariff gun is loaded, but it'll never be fired. Spoiler alert, folks, it was fired. Repeatedly. And Bessent? Well, he's on Air Force One, desperately trying to talk Trump down from the ledge, saying, hey, maybe we should, not tank the global economy. But Trump? Oh, Trump's loving the chaos. He says, let's let it run a couple more days. Do not say we're willing to negotiate. Because nothing screams stable economic policy like a game of chicken with the global markets, am I right? But wait, there's more. Just hours before these insane tariffs are set to kick in, Trump finally blinks, sort of. He announces a 90-day pause on the so-called reciprocal tariffs and slaps a 10% interim rate on every country except China. Stocks roar back, and Wall Street breathes a collective sigh of relief, coining the now infamous acronym TACO, Trump always chickens out. Bessent, ever the loyal soldier, praises Trump's great courage for staying the course. Courage, folks. Because nothing says courage like scaring the living daylights out of investors and then backing off at the last second. It's like jumping out of a plane without a parachute, then remembering you packed one after all. Heroic. Now, let's zoom out, folks, because this isn't just a story about tariffs or Trump's love of chaos. Oh no, this is a masterclass in economic absurdity, with lessons for everyone, from the average Joe worried about his grocery bill to the Wall Street suits sweating over their portfolios. So, let's break it down, Boss Economics World style, from the surface-level shenanigans to the deep, dark economic underbelly. And don't worry, we'll throw in some fresh, piping hot data to back it all up, because unlike certain policymakers, we actually believe in evidence. First up, let's talk about the most obvious economic fallout from this tariff tantrum, inflation. Now, for those of you who've been living under a rock, or maybe just enjoying a nice, tariff-free vacation, tariffs are essentially taxes on imported goods. And guess who ends up paying those taxes? Spoiler alert, it's not China, it's not Mexico, it's you, the consumer. When you slap a 49% duty on imports, companies like Ford, Nike, and Procter & Gamble don't just eat the cost, they pass it on to you. Ford CEO Jim Farley estimates these tariffs will cost his company $2 billion in 2025 alone. $2 billion. That's not pocket change, folks, that's the kind of money that buys you a small country, or at least a really nice yacht. And what do companies do? They raise prices. Nike sneakers. More expensive. P&G toothpaste. More expensive. Stanley Black & Decker power tools. You guessed it, more expensive. And here's the kicker, folks, inflation was already a problem before Trump decided to play tariff roulette. According to the U.S. Bureau of Labor Statistics, the Consumer Price Index, CPI, rose by 3.8% year-over-year in July 2025, well above the Federal Reserve's 2% target. And that's before these tariffs kicked in. Now, Bloomberg Economics estimates that Trump's trade war has raised the effective tariff on U.S. imports to nearly 14%, 6 times higher than when he took office. 6 times. And what does that mean for inflation? Well, a recent study by the Peterson Institute for International Economics found that a 10% across-the-board tariff increase could boost U.S. inflation by up to 1.5 percentage points. So, if you thought eggs were expensive at $6 a dozen, just wait until they're $8, because nothing says economic liberation like paying more for breakfast. Now, let's talk about the markets, folks, because if there's one thing Wall Street hates, it's uncertainty. And Trump's tariff tantrum? Oh, it's uncertainty on steroids. When Trump waved those tariff placards in the Rose Garden, investors didn't just panic, they hit the eject button faster than you can say, margin call. The S&P 500 dropped 8% in just 2 days, the biggest sell-off since the pandemic. And why? Because tariffs don't just mess with prices, they mess with confidence. Investors start asking, is the US still a safe place to park my money? Can I trust this administration not to blow up the global trading system? And when confidence goes out the window, so does capital. Billionaire Bill Ackman wasn't kidding when he warned of an economic nuclear winter, because if investors lose faith, you get a vicious cycle of sell-offs, higher borrowing costs, and economic slowdown. And here's the data to back it up, folks. According to a 2025 report by the International Monetary Fund, global foreign direct investment, FDI, flows into the U.S. dropped by 12% in the first half of 2025, largely due to fears of trade disruptions. That's billions of dollars that could have gone into factories, jobs, and innovation, gone, poof, because of tariff uncertainty. And it's not just investors who are spooked. A Gallup poll from August 2025 shows that only 37% of Americans approve of Trump's handling of the economy, down from 42% in February. That's right, folks, even the average Joe is starting to smell the economic chaos brewing. And when confidence tanks, you get a self-fulfilling prophecy, businesses stop hiring, consumers stop spending, and before you know it, you're staring down the barrel of a recession. Jamie Dimon wasn't joking when he said these tariffs could possibly induce a recession, because when you play fast and loose with the global economy, bad things happen. Now, let's talk about the elephant in the room, or should I say, the trillion-dollar elephant in the room, the federal deficit. Remember Scott Bessent, our supposed safety catch? Well, back in the campaign, he promised that the Trump administration would be laser-focused on cutting the deficit and driving down bond yields. Laser-focused, folks. Sounds great, right? Except, here's the problem, Trump's signature piece of legislation, the so-called One Big Beautiful Bill Act, is projected to increase the deficit by $3.4 trillion over the next decade, according to the Congressional Budget Office. $3.4 trillion. That's not a budget, that's a black hole. And here's the kicker, folks, Bessent's defense of this budget-busting bill is straight out of the supply-side playbook. Oh, don't worry, tax cuts and deregulation will supercharge the economy, and the deficit will magically shrink. Sound familiar? It should, because it's the same old, tax cuts pay for themselves trope we've been hearing since the Reagan era. But here's the reality, folks, they don't. According to Goldman Sachs, the U.S. debt-to-GDP ratio is projected to hit 6.6% by 2028, higher than at any point since World War II. And with interest rates rising, thanks, in part, to tariff-induced inflation, the cost of servicing that debt is skyrocketing. The U.S. Treasury Department estimates that interest payments on the national debt will hit $1.2 trillion annually by 2027. That's more than we spend on Medicare, folks. So much for fiscal responsibility. Now, let's zoom out even further, folks, because this tariff tantrum isn't just a US problem, it's a global problem. Trump's big idea is to use tariffs as a cudgel to force America's trading partners to the bargaining table. And hey, it's worked, sort of. Bessent has brokered trade deals with Japan, South Korea, Singapore, and Indonesia, complete with flashy photo ops and multi-billion-dollar investment promises. Japan, for example, agreed to a $550 billion investment fund in the US. Sounds impressive, right? But here's the catch, folks, these deals come at a cost. Japan also accepted a 15% across-the-board tariff on its exports to the US, which means higher prices for American consumers and strained relations with a key ally.